Hello there, welcome to Commodities Corner. This morning we're all over our three favourite metals, gold, silver and copper. We'll start off with gold. Gold still stuck below 1950. It's down from its record highs of just a few months ago, north of $2,000. We are joined now by Philip Strebel, Chief Market Strategist at Blue Line Futures. Philip, it's great to see you.
Yeah, thanks for having me.
I mean, obviously, the US dollar at its highest in months, putting pressure on gold, and also the prospect of at least one more interest rate hike south of the border or in the US. So what does gold need to get back up to 1950?
I mean, really, you need some of the economic data to break down. I mean, this is a lighter week, lighter economic data release week here. We need that consumer confidence. You saw it come in just a little bit lower. Gold did tick up on it, but it gave up some of its gains. We have GDP coming out later in the week. You need that to be revised lower. That can help provide some tailwind behind the gold market. But really, it's been the relentless assault of the US dollar higher. Two-year Treasury yields keep going higher. You have a negative sentiment across the board. The problem really occurred was the strength in the US equities throughout the first half of the year. NASDAQ was up 36%. The S&P 500 was up 16%. Investors knew that there was going to be some problems coming up in the following months, and they had to make a decision, go into something like gold, something like a defensive asset, or really just come out of the market altogether and put your money in 5% yielding treasuries. And that's what they're doing right now. And it seems to be a race to the bottom on the treasury markets because there's no telling how high these yields are going to go.
That's interesting. And of course, traditionally, people think that high real interest rates are bad for gold.
Absolutely, 100%. So as long as higher for longer theme continues, strong economic data, strong labor market, gold's going to end up under some pressure. You need that breakdown in the data in order to get it up there.
Let's take a look at silver. Silver, of course, in part an industrial commodity. What does silver need to rally? I mean, it is above $23 just per ounce today. You see a real chance of it going below 23, though.
Yeah, 23, we look at it as a long-term value play. We go to the deferred contracts out on that. You'll see a lot of the retail investors start to come into the market once we dip below 23. Now, there isn't a catalyst to send it up to like, say, $30, $40, $50, despite what a lot of people will argue. What they don't realize is that 54% of silver's demand is industrial demand. Most of that industrial demand comes from China and other emerging countries. So they need that kind of turnaround there on the industrial side of things, and then things will get going. So really, it's going to take copper to get going first, then silver will follow, and then the gold market could finally pivot last once the Federal Reserve indicates that an interest rate cut could occur.
So maybe we could put up a 10-year chart for silver. So traditionally, when silver gets below $23, it tends to attract buyers?
It has been from a long-term standpoint on the physical side. The problem is that the ETF outflows are just too great right now. Same thing on gold. Like gold's had 15 straight days of ETF outflows. They need inflows. They need people coming in and chasing this asset class in order for basically the value of that fund to go up. And then what the fund needs to do is they need to secure more physical behind it. So without that occurring, you're just not seeing that strong demand for silver at the moment. The way we've been playing it, because we know that anything could really occur. Like if you get the U.S. government shutdown, all of a sudden Moody's downgrades U.S. debt. You could see an inflow back into the gold market. We know that silver will respond as a faster moving asset class. So we've been using more option spreads going out to the March contract, like the 25, 26.5 call spread, 26, 27.5, depending on the risk parameters. But once we drop below 23, we'll start to deploy more 1,000-ounce futures contracts on.
What about copper? Is there any chance of copper getting back up to $4 a pound?
Copper was the one that's supposed to lead this charge and will end up leading us out of this thing. Copper, if you wind back like a few months ago, it popped up to almost $4. Since then, it's been a grind lower. Really, that Evergrande news that came out with the property developer in China just kind of falling apart at the seams, that was really what weighed in the market. And then if you look at a lot of times that China has deployed some kind of stimulus measures, we'll see the Nikkei we'll see that take off to the upside. And then by the end of the start of the U.S. session, you'll see it unchanged. So like the Hang Seng was up 5% overnight. Well, then by the time the 8:30 cash opens in the U.S., it's gone back unchanged. So it's been real weakness in the copper market. Despite some of the tightness on inventories, it just hasn't had that fire underneath it to get things going.
Maybe you can put up a 10-year chart for copper, because we remember it peaked in 2011 and then tanked, and yeah, our chart, yeah, we need to go back even longer. But in any case, yeah, copper, not so long ago, early 2022, it was pushing up against $5 a pound. I guess that was in part worries over the global metal market with the attack on Ukraine.
That's when they were weaponizing precious metals, things like that. Platinum and palladium were taking off to the upside. You did have an inflow where interest rates were at record lows, and you had, you know, the stimulus measures out there that were helping support the market. I would say like two things really to kind of take away, two charts to look at. You know, obviously you had the silver chart up. Recently, we've been trapped in this range where we get below 23, it seems too low. We get north of $25, $26, it's too high. So if you're trading this vehicle, you want to trade the range. And then the other thing to look at is the gold-silver ratio. That thing has just been cycling back and forth as well, between 83 on the upside, 81 on the downside. We have been recently on more of a downward trend at the moment, but after yesterday's setback of 50 cents, it kind of reset it back up. So 83 on the upside, 81 on the downside. That's where the valuations have been skewed.
Philip.